All right. So welcome everyone. So today we're going to start this document called Sample Know Your Client document, KYC. Because KYC is a very initial and the starting point where we have to know our client's needs, future financial plans, in purchase, refinance. So this document is a part of level two, agent level two, training part of that. It is a part of syllabus. So I pull it up, and it's interesting, and it help you to cover level two also. Also, this is very basic. Like you're going to meet your new client when you have appointment
Today evening.
today evening, right? So and this is for second mortgage,
Yeah.
and this is from the online lead because of the last the training for that particular prompt financial. So finally, see, so one training happened, and I seen a couple of leads are coming, right? So because that is a very unique product, and based on today's requirement of the customers, that product fit very well. Because first of all, the rate of interest is very attractive. So good job, Vignesh. Right. So let's talk about, so going to meet your client. So what is the purpose? So we're asking the customer what is the purpose of wanting a mortgage. For example, a new home, you're buying a new purchase, and or a refinance. So new purchase can be a principal home. New purchase can be a investment property also. So make a detail notes of that. So when you talk about, then there's also one question adding in there. How many properties customer own? Existing properties. Does the customer own any existing property? Are you a first time home buyer? So simple that like that. This is the starting point. So you know that the customer has a one property or two or none, first time home buyer. So you're starting from next question, start from there, right? So is there a specific timeline deadline for receiving the mortgage loan? This is very important. Based on the customer needs, the deadline will be different based on the priorities. So make your priorities accordingly. For example, you have a 5 files to work on. Out of them, 2 purchases and 2 refinances, and 1 is second mortgage. So purchases have a 5 days or financing up condition of financing also, and the purchases are definitely priority. But the second mortgage person is super priority. For example, for any reason, the person need a loan in a week. So in that case, we definitely put that person as a priority, right? Parallel to purchases. So based on customers' needs. So what is the benefit for that? If we fulfill the customer needs on timely manner, then definitely we can generate more leads in the future, and the customer is a happy customer for us, right? So another one, how did you hear about me? Very, very important.
So
There's a lots of you can say that when you start as a new in this business, so you're licensed, you have access to credit reports and lots of information of the customer. So many people that can approach you, maybe refer you, because you're new, you're now not able to see that the whole case of financing in very wide manner. There is a chances to make a mistake. So on that time, you must have to know who refer my name. So I used to ask. So for example, they said, "Oh, my friend referred me." What is the name of your friend, please? Because I want to know. I definitely sent some,
gratitude.
call and
Yeah.
thank you for the referring this customer to me.
Right. One.
So that's the way we can ask for that. It's very initial, right? And anything else you want to add, based on your experience, that I missed it, that in this purpose part we can ask more?
is it a short term or long term saving?
Yeah.
And yeah, but that comes in timeline, short term or long term. When
So
can you
basically,
pay?
question will arise when the answer comes from the customer. So the customer, so based on the answer, the new customers, I mean, questions will come. Right. So after that, when we are taking the personal information from the customer, so introduction, basically, your full name
Mm.
and your current address.
Customer's address, customer's name.
So address, we always ask the address for the 3 years address history.
Mm. 3 years address.
Yeah, address history. When you ask the full name of the customer, right?
Mm.
Better take ID
Ah.
because customers sometimes they use in the ID
Mm.
they have a middle name also,
Mm.
and sometimes all the documents they use a middle name also.
Mm.
So when you check the credit or something, or there's an initial there, so make sure when the customer providing you the name, you take the IDs with that. And IDs expiry date is always you have to check the expiry date of the ID, right? And sometimes it happens, I check the date of birth and suddenly the customer's birthday is coming, maybe within a couple of days or just
Maybe.
past, then you can just say your wishes based on that too. It's just like having building a relationship with a
Rapport.
customer. And the current address, 3 year history of address, right? And when you ask the address, you must have to ask, are you renting? Are you living with the parents?
Mm.
Because in some time, a product called New to Canada,
Mm.
so your credit is not established over a year. In some cases, insurer or the bank, I mean financial institution can ask for a secondary piece of to prove that you're paying some payments on time. That is a landlord reference letter. Also, they can ask for 12-month statement, 10-month statements, how long you're in the country, maybe for 8 months, right? And you're leasing that for 8 months. Then you got a good job out of probation, established credit. You have a credit in the previous country, you're having international credit, plus your down payment is saved, right?
International credit works for newcomers.
Yes,
Yeah,
it
UK,
works
same.
basically. Yes.
For selected countries.
For example, if somebody come from
UK.
US, then you can pull for Equifax for US credit too.
Just for North America.
Yeah,
Not
but in some country, if you, I think so, in India, you can pull your own. There is some organizations. Yes,
Banking sites and
yes. Then you can check your credit rating in it. Right? Yes.
Okay.
Yeah.
No, but when it comes to Canada, all these 5 countries, those credit reports and that history can be transferred. It
Mhm.
seems.
What all 5 countries?
UK, US, Australia, and
Commonwealth countries.
Commonwealth countries.
Especially Equifax
Uh,
has the information of pretty much all employees of Fortune 500. I just heard about that, but if we want to check it out, we can check in Google. It's really
regardless of country.
the reason is that couple of my customers, when I asked them for letter of employment, the letter of employment came from Equifax letterhead, and the customer was working Walmart. So Equifax has all the information of Walmart employees.
Walmart in India.
I think so. It will be definitely. It's a overall the company is a Fortune 500 company,
Like
for
the
example.
payroll
Is in the Walmart.
with a third party, and Equifax has the access to their payrolls.
Nice. Something new.
So things are getting, the data is getting created about for everything now.
Yeah, but how can isn't that breach of
No,
private
mostly
agreement?
it's not a breach. Basically, Equifax is playing a role as a HR also to confirmation of employment.
Okay.
Now let's assume sometimes it's a blessing as well. I got a client. He was in India working for a Fortune 500 company. He has a PR in Canada, but he was not living in Canada. But in case if he has to apply for a loan, because of that credit history, he could be eligible because we can verify his income.
I think so. Most of the banks in foreign when I used to work for a financial institution. On that time, we have a product for the foreign buyers. If someone work in Fortune 500 company, that it is easily to
Verify that.
verify the income and 35%, 50% down. They were able to get a mortgage on that time a couple of years back. But after that, this tax,
Implication now,
Yeah.
25%.
foreign buyer tax is now, in the implication. So coming back to the point, the address, 3-year address, and are you renting? Okay, how you pay your rent? You pay by check, e-transfers, or you paying by cash? The purpose of asking these things, if the customer asks, uh, if your rent you paying is traceable or not, in
Yeah.
case we need
Okay,
to support if the product is new to Canada.
okay.
And after that, how much money did you have for the down payment? And are you applying for a mortgage with a co-borrower, right? So that is a for the down payment purposes, particularly when we ask the customer. Sometime it's the first meeting, they're reluctant to tell you how much money they have and all their details because it's just like telling
Trust.
a stranger to something, but you
Yeah.
are a licensed mortgage agent, and always you need to remind, and when you introduce yourself, always use that.
Yeah.
I'm a licensed mortgage agent. Don't say card is I'm a mortgage agent with use the word licensed. That give a effect.
Money first.
Yes, right. If someone without license driving a car and you're sitting beside, it always in your mind. And if somebody has a license and still the maybe you the driver is not to that level, you
Especially-
still trust that okay has a license.
Especially once.
You pass the test. So license word has a weightage. Always use it, right? And in specific, in this case, is down payment. So telling the customer that percentage wise, I always talk about percentage wise the down payment because in our industry, 5%, 10%, 15%, and 20%. So default insurance premium changes when with the 5% or the minimum down payment based on the sliding scale you're having it, right? Over 500,000 property. So that is a 4% premium that need to be added. So need to explain the customer why I'm asking for that because first of all, I have to know your mortgage will become in high ratio category or conventional mortgage. If it's high ratio category, then talk about high ratio that have 5% or minimum down, 4% default insurance premium with the 10% 3.1 and 15 is different, is lower. Not sure. We
2.5.
hardly do a 15% deals, right? So even the person doing 15 there, I always try to catch up to 20 to save the money. So 20% is nil because it's conventional. And another thing why you asking the customer about the percentage wise down payment also because there is amortization difference in there.
25, 30.
Yes. So always remember because sometime we're giving some calculations to the customer. So make sure always keep your eye on amortization schedule when you calculate because a customer is paying 10% down payment sometime by mistake. We forget to change the amortization from 30 to 25. So remember always. Now most of the calculator are giving you a error when you putting the 10% down and the amortization is 30. They will not give you a calculation, right? But you have to pay because I did that mistake in my career. Not even one time, couple of time in very initial stages, but on that time you can memorize the things basically, right? And on that time we were in 2003 and 4, 4 maybe the when the iPhone came in 2004.
Four.
Yeah.
2004,
Yeah.
First time.
Yeah.
Yeah. So on that time we don't have used to have the apps.
Uh,
I used to listen the words apps, apps, apps. That app. You saw that app, that app. So that app, but I was not a
The tech
in,
savvy.
in Thai, so I have to understand that the app. So after completing that, okay, high ratio or conventional, tell them the difference, and then coming back to the difference, you have to tell them because they will ask the questions.
Mm.
But this is the KYC we are asking from them,
Mm.
right? But definitely when you ask them, then we have to explain them also the difference. That's a part of our of our service of job.
Mm.
But what is part of job of KYC?
Mm.
So we have to ask this question.
Mm.
And also the down payment is source of the down payment.
Mm.
So when you ask customers is in savings account and checking account, RSPs, or gift me sometime. Customer who was in Dubai or maybe in India or any other country, so the money is coming from there. So who's sending the money to them? Which account they're bringing the money? Trail. So definitely we have to provide a trail to the bank in this case, to the financial institution, whoever is doing a mortgage, right? We have to tell those details. And in that case, the three things are important. The source of the money, we need a source. We need from where the money started. So that was an account in the other country. Its accounts was belong to the client. I got a case where customer has a money in India in ICICI Bank, right? So the good thing ICICI Bank also is over here in the mortgage too, right? So I got a 90-day statements there. The money was there, and there was no large deposit. So through bank to bank got transferred. So I got there is a transaction
Bank transaction.
receipt kind of thing, basically all the details from which account is coming and which account is going, and money came here and Canadian account. So I provide the proof to the bank. So because AML, anti-money laundering acts, we have to be very careful, and this is our responsibility. Totally our responsibility to check it out, the source of money. It should be legit source. And if customer says cash, then you have to ask source for the cash. I do have a customer. He had used to have a flea market back in the days, and most of the income was cash. So he said the flea market income, I keep it cash, I spend in cash, and all right, fine. But unless you know that, and it was not a much amount, maybe $10,000-12,000, right? But somebody saying I have $100,000 cash or $50,000 cash, and it's a question mark. So what is the cash income? For your own protection, and you have to ask this question. And another thing, are you applying for a mortgage with a co-borrower? So that's the next question is, are you a single applicant, or your spouse is there, or
We have a
guarantor, or maybe brother, sister, family member, boyfriend, girlfriend, or just friends who want to invest together, two friends. So I have some cases basically, right? And like the two friends, school friends, living with their parents, having a job, but buying a property together for investment purposes. So you have to ask all these questions basically, because there is a column in the application. We have to about the relationship, applicant and co-applicant. What is the relationship? And you have to put in your notes also. So this is regarding the knowing someone, customers more about that.
जो आपका credit score का question था, so
Mhm.
your the part of credit score,
Mhm.
was that applicable with a specific lender or through universal that they allow that Fortune 500 thing, and was it with
No,
a specific lender or in general?
Majority of the lenders. Okay, what happened? Pretty much all big six, all Schedule A lenders in Canada, they used to have a product. They may still have a product for the foreign buyers. It is, I think, so overall. I heard in the news is less than 2% or 1% of the whole transaction of the the country, right? But the issue was made big anyway. And yes, and I don't hesitate to say that the political side of this country took it to yes, advantage of it, but it is very minor. So before the product was that 35% down, no income required, no foreign income required. So money is supposed to be 90 days in this country, or some institution says the 30 days in this country, and you can come and buy. You have to be present here and buy the property. 50% down came back there. So I did the mortgages when I used to work with a financial institution, 50% down. So the gentleman was from Turkey, and I was working there, and I asked him the income documents, whatever he works there. Uh, but 50% down, no question was asked, and the deal is easy file. But um, other thing is this: the source of the money. In some cases, the products basically give a question mark, like if someone buying for $1 million, $500,000 got wired in Canada, and we closed it, and so as a Canadian citizen, if there is a 5,000 deposit in your account, and you have to answer for that. What is the source of this $5,000? For example, any financial institution asks you 90-day statement of a bank statements, for example, saving. So they say, okay, there's a $20,000, and then suddenly there's a 10,000 deposit, and or 5,000 deposit. Just go with a five. Then is maybe a five figures. Definitely, underwriter will ask, what is the source of the $5,000? So any large deposit, see is deposit or e-transfer or something. So you can ask the client, what is the source to?
Yeah.
Before the underwriter asks you, ask the client,
Mhm.
and mostly in the savings account, the money coming from the checking, whatever the extra money for saving purposes, the customer putting in there. It can be that, it can be maybe a gift, or maybe somebody gave it to the customer, or customer borrow it. You never know.
Yeah.
And remember, the borrow funds are not allowed in down payment, right? So all these things. So, but you have to know about that, because KYC also help um, to package the file, to package the deal.
The needs of the
Yes. And for small things, known if something is not fitting in the product, any small thing, if the product is not specialized products I call new to Canada, foreign buyers, or business for sale products with the net worth lending, they are specialized product for the financial institutions. But the regular products, there's always exceptions. Ask for exceptions. And the simple is that, for example, that $5,000 deposit, and it's borrowed from the friend. I will tell the underwriter, customer borrowed this money, $5,000, yes, in the account, but I'm not, adding that money as a part of down payment. So it was $20,000 90 days before. Now it's 25, but that 5,000 kindly don't include in there, because he borrowed the money from the friend because he needs some for some reason or whatever. You can say that.
Well, we don't have to state that reason if we are not adding that.
No. But it is basically declared, and we are not counting that money as a down payment. Simple. And it happened, and I got exceptions on that. Yeah, we don't need to hide these small things. There's lots of room for exceptions for that. Yeah, and so income and expenses, basically coming back to you. Are you employed or self-employed? Like last time I said, is employed, is a full-time employed or part-time employed, self-employed, is you have a master business license, or you have a incorporation, or you're a partner in the corporation, sole owner, or in case of not sole owner, or you are a sole proprietor without any master business license, but you have a one account and you're running your business accordingly, right? Maybe your small businesses. So you have to ask for all these details, basically. And did you receive any bonuses or additional commissions? If you're a full-time employee, is any, bonuses or any additional commissions over time? What was your income in last 2 years? How long have you been at your current and previous jobs?
In 3 years.
So
job,
these questions are basically, you have to understand, you don't need to be copy them and ask the customer. In your conversation with the customer, you have to ask this question
In a flow.
based on the situation based
Mm,
you are in there, right?
mm,
So most of the time, I when I ask about the income, so first of all, one thing is before you ask, so tell the customer, I'm going to ask you about your income details. So with the best of your knowledge, answer me, because all your answers going to help me to help you
okay.
to get the mortgage. Because this is the income questions are very specific and people don't want to share with you. But again, so being a licensed mortgage agent, I must have to know
Mm.
about your income details to analyze your file or application. That are you fitting in a certain product of a financial institution for A lending or B lending, but private lending, as soon as you use the private word,
Mm,
the customer's morale go down,
Mm.
right? You don't need to say.
ARP.
Yeah. Or maybe it's basically you can say which products you're going to fit.
Mm,
That is well enough, right?
Generic.
Yes. And based on that, when the customer start telling, okay, I'm a business myself, or I'm on the payroll, then your further questions.
Mm.
But knowing it, okay. So you have to be the customer is full-time employed. It means his salary coming bi-weekly,
Mm.
bi-monthly, or in very some rare cases monthly also getting deposit in the account. If customer is business for self, so there will be a very variance pays are coming or deposits are coming in the account. And there is a one application actually I'm working on for the down payment. Customer is a drywall installer. So drywall
Drywall.
installer.
Oh, drywall.
So I ask the counter questions. Are you a part of a union? You're a member of a union. Can I see your union card or something like that? So it gives me a surety that he is
A license.
Okay.
drywall
Okay, he's not lying.
installer.
Got it.
Yeah, no, we just it's our job,
Mm,
basically, you know. Even sometime I sent to the underwriter too,
mm,
because what happened? He doesn't have any website
mm,
and he doesn't have a master business license.
Mm.
So I ask, and he's a very independent contractor working with the different builders.
So which is more like
And
self-employed.
All he has a one account in one financial institution, checking account, and all the money coming there. So for the down payment, there was a large deposits there. So what I did, I asked the copy of invoices and the copy of checks, front and back of the check. The check is cashed, so he provided me invoices, copy of checks. So I add with the down payment. All these big large deposits are the
Invoices.
invoices. This is all
Payments.
his income,
Okay.
right?
Legitimate.
Plus, it's also proving that even he doesn't have a website, he doesn't have any business account, doesn't have a master business license, but all the money coming from the different builders he worked for, and plus his union, card. That's just extra, basically, documents to support the application.
What if he's not in the unionized?
Hmm?
What if he has not joined in a union?
There's no problem with that.
No problem.
Then I can ask a reference letter from one or two builders.
Okay. Okay.
A lot of those people have like certificates or saying like a mechanical.
Yeah,
whatever they
yeah.
have.
Even I always for example, there are I got a files for health workers, personal support workers. So instead of working for any company, they have maybe they go to 3 or 4 houses to support the elders and the needy people, and they get paid as a business as a self-employed.
Oh, intra-trans?
No, yes, whichever way.
Okay.
So they're not, but what I do, for example, and they're getting a $5,000 deposit average a month from three or four, their clients. So I add their certification of PSW. It's a PSW the certification, right?
Yeah.
Plus, I get a reference letter from those one or two customers that she's taking care of my mother or my child, or that that's more than enough. You have to build a case. That's why more you know about your customer, tell the customer, more we know about you, so then our brains start working towards solution, right? So this is the beauty of that mortgage. What happened? We lost that, uh, you know, I don't know which right word I have to use.
Art,
Yes. So we got very artificial intelligence,
common
like,
sense thing we lost.
okay, GDS, TDS, here you go, approval, no, best rate, that. But we forgot the whole real purpose of to getting a mortgage, because buying a house here, it helps you in so many ways, so many ways. As your equity start built, house price is gonna go high, going definitely, because we still need more houses in there. Demand is high, so that equity helps us to buying another investment property for the kids' education, for the retirement, your own retirement purposes, or helping any families, or in any emergency funds. Sometime you can use the equity. So many ways we are using the equity for that. How we can put that whole thing in jeopardy, where we are just focused on one thing, that is rate, or just focus on just get this deal approved. So rate is from customer side. For our side, as soon as the deal approved, man, let's close it, compliance, get money. But whole process we forget. So what I was doing in level two, the focus is on that, because what happened, all the financial institutions products are very black and white. Regulators make it, right? But when it comes to the private lending, you are the person, you are the face who's providing a solution to your client. On top of that, okay, client is taking 9.99 private mortgage, exit strategy. Because right now, to afford that, customer must need to do some extra work over time, finding up some part-time job, or because it is not a conventional way we got approved. Yes, there is a risk. Private lender knows. We are telling the risk to the customer also, because one or two late payments happens. These private lenders will not take a very sweet time for the legal proceedings. Basically, simple, because they are not backed up by the taxpayers' money. Big B's, definitely somehow the government may be taking care of them. Never know. Yeah, but not the private lenders. So they have to be, recover the money faster. So customer must have. We have to tell the customer, and all material risk. Any changes happen, now you are up to nose. For example, lots of situations I see in it. Customers have no money left after paying mortgage payments. They have to buy the groceries for maybe on the credit cards, or work extra work to pay these credit cards. They're hardly, hand to mouth is okay, it's okay. It's balanced, hand to mouth, fine, not savings, but now it's going negative. On top of that, financial institution is not getting the enough interest, whatever they have to pay, the customer has to pay. A negative amortization. So everybody is in the losing conditions. But our customers should not be suffer like that. So your service level, your job, and explaining the customer should be very clear. And there's a more documents, so we have to take even that their initials also. I'll talk about suitability and all these things basically. So no, giving a knowledge, especially when the customer going private, you must have to provide him every single step of that it is definitely cost, extra cost, and how you can come out of it. A strategy, a plan, and then definitely it's a repeat customer. Definitely it will generate income for you. But also this time when you're generating an income with a customer one ladder up, breathing better financially, right? So this is the way we have to take the customer right now. And not like the customer you were talking about the Brampton. They recently bought a house and couple of months and looking for a second mortgage. Yeah, very careful when in the situations. One of our wrong, basically suggestions, or it can, you know,
Backfire.
backfire us
Yeah.
basically. Yes. Now, so income. What is your income for last 2 years? So we definitely ask for, employment cases 2 years T4, or self-employment cases we need a 2 years T1 journals, notice of assessments, T2s, corporations, business account statements. So based on the way the customer is running the business, and how long have you on the current and previous jobs? We need to give a 3 years history of the employment. So we have to collect that.
Okay, I was, sir, just one, a side question related to this one. I was making points to create a Insta reel or something with the title "Magic of Two." The other day that you were, explaining about 2 years income statement, 2 years this one. Once you file the bankruptcy, 2 years of credit history with two trades
Trades, yeah.
in it. So, but here what you're mentioning is 3 years address and 3 years income proof. Because even in that, I made a note: 2 years of T4, 2 years of NOA, and 2 years of T1 or business statement, financial statement, and those things. So here you're mentioning it as 3 years. So it has to be mandatory.
It's a good question you're asking. I used to work for a financial institution. That financial institution's application was asking only for 2 years,
Okay.
right? But in a broker channel, even the Philogics and Velocity, we have to fill the 3 years history. So it is maybe when we started these programs back on those days, so they set up accordingly. 3 years history is needed, right? So there's no like a standard there. Why not 2? Why not 3? But it is there, so it is there.
Yeah.
But there
More
must
the
be a
better.
there must be some reason behind it. When I know, I will let you know. What other sources of
Wait,
income
are
do
you
you have?
scrolling down? Is it moving? Or is it just, are you scrolling down?
Yeah, yeah.
Or it's not moving on there? Is it? Oh, okay.
Now?
No. You can turn off the screen here and turn it back on.
So
Now?
it's off.
Yeah, disconnect it back. Maybe it just froze because it was.
How much is Google TV?
Uh-huh.
How much is Google TV?
Oh, it's not a restriction.
Oh, sorry.
No. We just have a Google, we have a Google account,
Correct.
but
So it's
this
like
TV
YouTube.
allows that. Yeah.
It's like a YouTube movie. So you have to purchase or rent any movie that we need to watch.
Yes, it's a whole different membership thing.
All right. So what other sources of income do you have? I mean, you have a part-time job, second job, any pensions, bonuses, right? So when you are taking ID from the customer, for example, customer is 65 years old, for example, right? And I got some customers, they're still working at this age. They have a business, yes. Their families are there, but they want to invest, for example, in a future property. I did a mortgage for a person who was retired and getting a pension from the company where he worked for maybe almost 28 years, also other pensions. So he was qualified accordingly. So based on the age you ask, are you getting any pension or not? Because majority of the time, age of 65, you definitely start getting pension, and that is a part of income also. So what kind of a customer is sitting in front of you? Basically, the questions accordingly. Have there been any changes to your savings or investment portfolio in the last 12 months, or will there be? Yeah, for example, someone have a stocks, how long you invested, and what is the current value of the stocks, portfolio's value, right? Same with RSP, and GIC can be a down payment. So many sources of the down payment, Give-
CCB.
yeah.
Childcare benefit.
If someone
No,
recently.
child tax benefit you cannot use as a down payment.
Yeah, but
No.
Income.
Okay.
Child tax benefit you can use the income. Income,
ah.
yes. Income, of course.
Mm.
Lots of financial institutions accepting it. Lots of lenders are accepting it.
Oh, I had a question. If someone went into like disability like a year ago or something, and you had like you would include that into
Income.
Yeah, that disability EI would be considered
or
as an
something like
income.
that. Yeah.
If in the mostly when someone is working as a seasonal worker,
Hmm.
for that only.
Okay,
yeah, I
okay.
remember.
It's not for everyone. No.
Yeah.
Like teachers.
Seasonal means
These
construction workers, landscaping,
Snow
snow blowers. Yes, वो दो. Otherwise, EI is not.
Okay. Yeah. I remember.
Yeah. Yes, but in case your customer is on mat leave, then.
Oh, okay.
Well,
So remember,
Hmm.
If customer coming back to job within 12 months, but this is the standard I'm talking about, the policy. The policy can be different from the institution to institution. So standard policy, I want to say it basically. If the customer is coming back from maternal leave within the 12 months period of the application or the closing, I'm not sure yet, but I have to check it out because these cases doesn't come out. Say for an application, for example, take a bigger side of that. And then the financial institutions can take 100% income into consideration. If somebody is making $100,000 and a maternity leave, 6 months already in the maternity, coming back to work in 6 months, letter of employment says the start date of the work, what will be the job title, and what will be the salary once you're returning back, and then they can use $100,000 as income. On that time, you have to ask the customer's pay stubs. The last pay stubs the customer got it, plus the EIE coming in the account is a proof, or ask the CRA from the CRA side, they can provide how much EIE she's getting as a mother. Same as a father also, see, because sometimes you divide the 6 months here, 6 months both take there. Yes, that is also you can.
But even during the period of maternity leave or the parental leave, they get the minimum pay, right? Like $2,000 or something.
I understand, but in the mortgage application, within 12 months, if the customer is coming back to the job and we can confirm via letter of employment in detail by the employer, we can use 100% income. Whatever the customer, not just 2,000, 100% income she or he used to make on.
Irrespective of he or she joining back or not.
No.
No, letter of employment definitely employer will never give a letter
Give a
of
letter
employment.
like that, yeah.
If they're not joining
So
back.
they will only confirm that as per the letter of employment, this employee will join back after or has a break of say 12 months or 6 months or 9 months.
Unless it is your own company, say for example your husband's company, husband's company that you are an employee, your husband can do that for you.
But sir,
Again,
my counter question to you: there is no EI deductions when your family member working
Oh,
for the company. So you're not eligible. Anyways.
It's your father's company. Okay. Oh, even family. Okay.
Yeah.
Okay.
family, you can say anything. You can do
So
anything.
this is the beauty of this
Go for 5
industry,
years,
So many
Thank you.
things, basically, you know.
Mm.
Yes, we think it can be, but we have to see the accounting prospect, the way of the accounting work, the way the regulations work, accounting side of that, so many things in there. Okay, so have there been any changes to your savings or investment portfolio? What are your current expenses? How much rent, mortgage do you pay now? Is this comfortable, affordable for you? Right. One thing, in the KYC, why I'm asking the customers rent, because right now customers living in a one-bedroom apartment, a couple, for example, and they're paying $2,200 rent or $2,500 rent. Okay, 2,500
Yeah, that's
is not a bad number for these days. One bedroom. They're going to buy uh, an apartment that is basically the cost of the apartment to purchase is 500,000. Let's go the minimum side of that.
Oh.
Now, I have to do some calculations here. So for that purposes,
Kaji party.
Anji?
Lottery ID.
Ah, 500,000 purchase.
Mhm.
Customer has a minimum down, 5%. For example, the rate of interest is any rate of interest. The lowest end rate of interest in the market right now may be 6.20.
Oh.
Assume maybe,
Okay.
right?
5.84 TD.
Huh?
5.84 TD.
Oh, really? Okay. Yeah. It's saying 5.84, right? Is a 5-year fix?
5-year fixed, 25 years amortization.
25 years of amortization. Good. Here you go. So 5.85, but with the stress test.
It's 7 point.
Plus two.
Yeah, plus 2.
Okay. But forget about the stress test right now. So 5.85. Let's crunch the real numbers, 25 years of amortization. And let's calculate.
Frequency.
The monthly payment is $3,116. So see the situations today.
2,500.
You renting out, complaining that rent is high. Of course, rents are high because demand and supply. You're paying 25. And if you're buying a house, a small condo, smallest condo, I hardly see I think so, we are getting a file soon. The customer buying a $500,000 property outskirt,
Okay.
basically, maybe 80 kilometer away from here or in a small suburb. Fine, because he working remotely. If consider that way also, because $500,000 in GTA may be a condo, and has a huge maybe old condo, but it is very
It's like a
unlikely
studio.
to find it.
It's a studio.
Okay, go with that. Customer is moving, and 3,116, approximately $100 is a home insurance,
$100 is a home.
monthly home insurance, right?
150.
Plus utilities
150.
and the property tax altogether maybe 500. So 600. So 3,116 plus
Plus condo.
600.
Plus condo maintenance.
If there is no condo, forget about that concept.
Outskirts, say for example.
For example, they are on a
Freehold.
freehold outskirts somewhere in the Niagara area, in that area, very
650.
small, right? Maybe small 2-bedroom house. So all together, plus some utilities here and there, not maintenance here and there, your cost will be going for $4,000 very easy for this house. Living now, you're living on the rent 2,500, and 2,500 to 4,000. You're in. So now you have to see exactly customers' incomes are good, they qualify, but you have to bring that point in customers' mind also. Yes, you are affording right now, but it's TDSR is 45%. So 45% of the gross income is going towards house. By knowing the inflation rate today, by knowing things getting expensive, by knowing that they are moving a little away from the cities, there's maybe, they have to come back to city or 70, 80 kilometers, they have to drive. you have to. Is it okay
Create a picture and show them.
that they have to buy this house? Is that house is fitting best in their portfolio at present moment?
No. No.
No.
Why customer said, okay, it's qualified deal, but customer saying, no, I want to buy a house because I want to be a owner of the home. I don't want to pay rent, even it's 2,500, right? Even the rate of interest is high. It is under my capacity. I can definitely, afford it very easily. Then I asked the counter question: in case of rainy days, or something, one person lost the job. So what is your
Backup.
backup in there?
Mm.
Oh, actually, my father is in US, and he's sending me because I'm moving in the house. So he's sending me $20,000 as a gift. So I'm using my down payment, but he's also helping me to $20,000. So you calculated, yes, 6 months,
Cushion is there.
cushion is there, and definitely, and you write it down in the application also for the underwriting purposes, basically. That too, it helps the customer. Sometime buying a house, nothing left to the customer. It is KYC is also knowing the customer, and by knowing the customer, telling the customer
Mhm.
that you are going to be on edge right now. Yes, your $2,500 is getting drained. So that calculation was good when the rate of interest was lower. Maybe the rate of interest, for example, if the rate of interest is, for example, 4% on that time,
No, still.
it's 25.98.
Oh,
Exactly same.
The only customer paying the utilities, etc., because
Taxes,
utilities and
yeah.
taxes,
Mm.
right? But they got a bigger room, bigger houses, and it is still they can have some savings after that.
Mhm.
But right now, this is a very tough decision to make when customer is depending on you to make a decision for them. In that situations, we really need to give them a very good picture of that and let them make their decision accordingly. We have to, give a pros and cons in front of them. If we have to stay longer term in the market, we have to be, be in that approach. I am not against technology. I'm not against, AI to be, you know, uh, just application got generated. You send a link, customer filled, qualify, no discussions happen, what rate you need it, what term you need it.
Just like
You just,
ATM thing.
yeah, kind of. It is, and later on, one customer came to know, oh, I should have to take fixed instead of variable, or so many things, not this product, short term. We never think um, a backup plan in case customer's financial situation changes and he has to rent the property. But in some cases, I've seen it. Some youngsters basically bought the property, good income, but lifestyle and all these things. So they feel okay now it is out of that. They rented the property and living back with the parents. In that case, what happened if the property's rent is taking care of all the expenses or not? Mortgage, taxes, right? Utilities anyway paid by tenant, and plus 1 month rent you have to give it to in shape of commissions too.
Mm.
So many calculations are these basically. When you see the customer is calculating $10, $20, $30, so you know the risk appetite of the customer too, and we have to give advice based on the risk appetite.
And on their lifestyle.
No, yes, because the customer's financial situation will be stronger in the future, then definitely repeat business gonna come. So you see, 500,000 purchase. Some in some customers' portfolio, even buying a house is not a right fit at the moment, but they're still looking the houses. I really just want to be,
Even me.
no, I understand. Looking house means like knowing the market, is okay,
Mm.
but not aggressively looking to put an offer
Mm.
without the real calculations, basically.
See, one thing is like especially in Canada, not sure about how US works.
Mm-hmm.
It's in the air
Mm-hmm.
that the rat race and that thing is around you. That my friend got a home. He has investment properties. He's not sure what friend is going through.
Mm-hmm.
Has he reduced his
Yeah.
two chapatis to one? He
I
has stopped
understand.
enjoying ghee.
Yeah.
He has stopped going for shopping, etc. But there is an air around you, aura around you that we need to buy a house.
Yeah, of course.
And I was talking to my friend who yesterday only that in India, in my last 10 years of job, we never thought about it that
Yeah.
we should own a house. What I was concerned was like my mutual fund portfolio. How can I like increase it? But here it's like that anyone who's coming here, you have to buy a house. Have you
You
bought the
had a
house?
house, you were living with your parents, so
Exactly. So here it's like one my new friend came to Alberta and he was like, "Yeah, you did a great job in buying a house. You don't know my exact condition, man.
Mhm.
My wife lost a job. We are struggling to and like so
It's part of the lifestyle. It's part of the status here. Yeah.
to
for sure.
own a house and especially
Yeah.
with Savish community, like sheep or herd what we say, right? That उसने लिया ना मुझको भी लेना है.
So basically, I don't know. BB is watching too. I don't know how she's gonna say in Spanish, but in English we say, if you don't own a house in Canada, it means you don't settled in Canada yet.
Yeah. Literally.
In
yeah.
Punjabi, you can say it a different way, right? So that is a burden always in there. Well, we collected so many debts we forget living, right? So many things we're using for a
Like that.
small period of time, right? But we spend a lot on them. We're using this body 24 hours.
Mhm.
Spend some on that. Get it fit, be healthy, enjoy it. Instead of for example, it is but in the starting, the changes happen afterward your experiences basically. So buying a super luxury car, or instead of you for that you increase your grocery bill to for $300 extra to for the healthy choices, right? That is definitely everybody have a different way of thinking in this case.
Mhm.
But economy has to run, and there's a people they definitely want to buy super luxury cars too, and there's a people always thinking to be a healthy choice of eating, spend money on that part too, or on wellness. So there's all kind of people. So it's balance we need, right? So how much rent, mortgage, and after that we're going. Do you have any other expenses? For example, daycare. Very good example. In our budget, we forgot to add daycare, right? We did have one.
Assisting parent with retirement cost, so we often ignore that.
Yeah,
Back home, we have to spend $200,
Of course.
$50 a month.
yes.
you were asking how BB will say.
Yeah.
She mentioned how she
My
will say.
brother is
Oh.
studying, my sister is studying for her marriage, for his marriage.
Yeah,
There are certain costs back of your head, but we fail to recognize at the time of application. That was an obligation, right?
Especially all the immigrants that are here, like they're supporting the
100%.
family.
New
back home.
immigrants are definitely going to have something of this kind of.
so BB said in Spanish, si no tienes casa en Canada, o no estás completa. I hope I pronounced right. Casa means house.
Yeah, like your life's
Complete
complete.
means you cannot complete settle,
Yeah.
So yeah. Credit history. In our last session, I told the three questions. I start with the three things. Actually, I start with the credit first. Basically, right?
Capacity and
Yeah.
collateral.
Yeah, because your income and down payment has a no value unless there's a good credit. Yeah. Otherwise, you have to be because expectations of the client is a lending.
Yeah.
Right. So with that, knowing the credit is very right. And most of the client, one thing I like it, they're very aware of their credit now. You can see lots of Borrowal, lots of Credit Karma, these facilities available,
Yeah.
free facilities, people keeping a eye on their
Track of.
track of their credit scores and all these things. and that is very good thing when when any country's citizens start thinking about to be financially healthy, the country will be financially healthy. So this is the thought. Yeah. So thanks to Mr. Modi for this thought. Yeah. We have to bring that thought in our here. Yeah. I was actually thinking to be do a once a free seminar in Humber College. Why don't we make a group and we will start over there also?
That's
That to how to you analyze your credit report. That's it. How it impacts your life in the credit-based environment. Credit is so important for us.
Credit management is also very important.
Dushyant, trusting me or not for a penny, I don't care. If I have a good credit, my financial institution trusting me for $100,000, loan, that is important these days. Now those days gone. Like if I have to be depend on Dushyant to borrow some money. So for that, credit is very important. So we have to keep educating our customers always about the credit, and that bridges the gap basically. That customer and you comes more near, and the trust matters when you educate the customer. Basically, every human has a habit to give a free advice, right? As soon as somebody is coming here with a limping foot, and everybody will stand up, so you will say that medicine, you will say that medicine, I will say do that yoga, I will say do whatever the things, everybody starts suggesting that. So that energy we use to do that thing, put over here, because that suggestion will be fact-based, well listened, and if the customer is working on the 80% of that, so it will be a successful application for us in the future. So credit history, can I have a permission to pull your credit bureau? Have a customer sign the credit form, right? So that is basically compliance because we have to put the credit. Before that, I will make a ground for that. A majority of the customers, they will say, okay, pulling the credit, it will affect my points. And before you ask pulling the credit, just ask some questions. When you got your first credit card, how long you have a credit, how many trade lines you have it. If in the trade lines, you must have to ask auto loan, especially or lease, because customers remember by heart. Also, one question we always forget to ask the customer: are you a co-signer to someone's loan? You never know, out of 100, one customer you can find it. And then we pull the credit, we know who. You have a 2 cars, bro. You never told me that. Oh my God. Yes, I remember. I'm co-signer to my brother-in-law. Yeah. But you know what happened? What you do, brother-in-law? Oh, there's 2 late payments there. And affect your credit.
Yeah, it affects your
And because of what question you have, that they often miss that before this one, co-signer thing. You said one question we often miss that.
If the customer is a co-signer,
Before this one, you asked me a question.
how long the credit established, and how many trade lines,
Three lines do you have?
and
Especially in this auto loans.
auto loans, they always remember.
That's how it
All right. So if any young customer is coming, sorry, I forgot maybe,
No.
let me, if the young customer is coming to me, and what I ask always to the customer,
are you a co-signer?
student loan.
Student loan. Okay.
So you see, if someone is a professional,
Uh,
especially health professional,
uh,
or most of the time they have a student loans.
mm,
And any personal loan,
Yeah.
which they are ashamed to discuss because these so-called AB6YC companies charge exorbitantly
Mm-hmm.
high, like 28%
Mhm.
interest, 40% interest, and they often are ashamed to disclose in the initial meeting that I have $1,000 rolling, $2,000 rolling.
But I will ask one thing. I always ask one thing to customer to pull their own credit report. Yeah.
Mm.
So this is two things. One thing. One is basically customer pull their own report, so they know, go one page by one page.
Mm.
So credit report, your name, first name, last name, right? Then you go phone numbers there, address history is there, maybe a partial missing date of birth, partial social insurance number, but definitely things are there. How many credit cards you have and all these things. That is the best idea when you meet a customer. Ask them to pull your credit report and just sit with me.
Okay.
Yeah. So that report is not for the lending or borrowing purposes. That's for the reference for the customer, and the FICO score based on the credit history, right? So, so it's a good education to giving the customer. And I even mark them basically. If you have a overuse of credit card, I always educate. Do not try not to use more than 50% of your report. Sorry for the limit,
30%.
and 50.
50.
Yeah. So more you go up, in this case, more you're gonna be. Your score's gonna be go down, right? So other thing is another. There's a one. Do you owe any money to CRA?
Mm, mm,
That's a question too.
And sir, after this, just one thing. Somebody has asked what is the difference between co-signer and guarantor in this one, WhatsApp chat.
Co-signer and guarantor.
Guarantor. Yeah.
Co-signer.
No, after we complete this.
Okay.
Yeah.
After that, all right. So have you ever missed the payments? Do you have any collection, judgment, support payments, and bankruptcies? Are you up to date on property taxes? Do you owe money to CRA and all these things? So these are the questions you need to ask. And in case of refinance, you always are your mortgage. In the refinance, my major questions in the KYC are, no, I ask
Purpose?
your first mortgage is up to date.
Mm.
Do you have any second mortgage or not?
Already. Okay. And
If the
tax-
property value is $1 million, his first mortgage is $300,000.
Mm.
In 80% cases, the customer must have a line of credit,
Oh, okay.
home equity line of credit
Okay.
against the house. So I always ask the question, do you have? And 80% cases, customers say yes,
Yes.
but they forget to tell.
Okay.
Customers sometimes forget that the home equity line of credit is also a part of
Mm.
a mortgage,
Mm.
but that is in the shape of
Line of credit.
yes, revolving.
Revolving. Yeah.
It's a revolving mortgage, you can say that, right?
Okay.
Yeah.
And also, if they say yes, the following question would be, how much are you, currently using?
Yeah. And then you have a current mortgage is a variable, current mortgage is a fixed,
Mm.
because if you have to refinance that property,
Mm.
we have to educate the customer
Mm.
that you have a 3 months interest penalty,
Mm.
or you have IRD. Then ask your existing financial institution what is the IRD,
Mm.
interest rate differential penalty.
Mm. Mm.
So if the penalty is like 3 months only,
Mm.
and that is the minimum, and most of the time is accepted by the customer,
Mm.
right? Because it's a less amount. But now prime is high again. Now is penalty is high too, right? And IRD is interest rate differential. It applies in some cases. In that case, if that is higher than 3 months interest, so 35,000 to break a mortgage, right? Customer need $100,000. So 35% is boom gone. I will never suggest the customer that if it's need $100,000 to break a mortgage for 30,000, even for $20,000, there may be a better solution for that. Even for $15,000, if we're going with the prompt package for the 100K, customer need it, and compared to breaking that, he's showing the example. So in that case, that is the best solution for the customer.
You mean that,
Yeah,
168,000.
So we cannot say that customer need $1 million property, refinance 800,000, and how much our commission on that to be. There's the one way of thinking. Then we forget about the cost of to the customer,
breaking the
penalty. And then we take to the prompt. Yes, they maximum pay maybe 4K and all these things basically. That is maybe less money. But remember, When the right time will come, the renewal time will come. On that time, you're going to refinance the customer. It's a repeat customer to you. Think longer. Mortgage is not a one-time shot, sir. First thing I want to tell you here: real estate transaction is a one-time. House is purchased. We did a mortgage one time. Refinance will happen. Second mortgage, home equity line of credit,
Renewals.
right? So many. So now the customers are selling and buying very fast. There's another big change in the market happen. Before, the people used to be keep the property for certain years. They grow their families there. So like your kid born and gone to university, and the parents still living in that property. They maybe have another property too, but there was no that aggressiveness of buying a properties like that. Certainly that happened, and getting bigger, bigger, bigger. Every 3 to 5 years, people start changing their houses. So I'm not against that to changing it, because everything is changing. World is changing. So same way the business changing, circumstances. I'm not against like you are in the semi-detached and don't buy detached. Of course, right? But now the humans, the way we are evolving right now in this industry, people are changing their houses 3 to 5 years. I seen it basically. I was in a marriage party last night. So let me count. Since I know the gentleman from 25 years, so one, two, three, four. He's living in his fifth house. Fifth house in Toronto.
5 switches.
Yeah.
25
So
years.
see the
Yeah.
changes are there. But I know the same. Some people that's maybe they did a 2 or 3 transactions, maybe. Because starting from smaller to bigger. For my principal house, I did 3 transactions, and I purchased condo, then condo to a small townhouse, then small townhouse to the house I'm living. So this is the whole history in 25 years. So average 80 years. So I'm not a very rush person in the principal house changing, but still there is a change in 8 years. So real estate transaction may happen after 8 years with the same client repeating to the same real estate agents. But in the span of 8 years, we might be refinanced not even one time, maybe 2 times. Because whole customers are depending a lot on the equity of their houses, because savings are getting less and less in the future. So we have to change our strategies accordingly, according to the time too. We cannot tell the customer, okay, now this is the house forever for your life. Stay there for 15, 20 years, raise your kids. Because you living here now, you got a good job in the, for example, other province, you just sell it and go there. So the emotional attachment, yes, there is with the house. It will always will be, but it's getting less day by day now.
Yeah.
But usually this is, in the whole span of your life when you're buying a house. So you buy small, then go bigger, or the final house, maybe third one. Then when you're retired, it's too big for you. Then you do another transaction to get a smaller one, maybe. So a couple of houses transactions on the whole lifespan happens. But we don't have to serve the customer that this is a one-time transaction. No.
Sir,
And
yeah,
property information,
Co-sign.
Sir, yeah, co-signer versus guarantor.
Guarantor, cosigner, very simple. If Dushyant is a buyer, you want to be guarantor with Dushyant in the mortgage and the property. So your name will be in the mortgage. A mortgage liability, you are 100% responsible for the mortgage liability with him. And most of the time, guarantor, we need it when he has a great income capacity is there, but he has a challenge with the credits and late payments or something like that. So the financial institution can ask, could you bring a person who understand and mature and his payments are on time? Doesn't matter his income is not there because you qualify for the income. On that time, you work as a guarantor. So you are not on the title of the property. You are only on the mortgage and the 100% liability of the mortgage you have.
But he's qualifying on his own.
He's qualifying his own, basically.
But for guarantor versus co-signer, what are the implications for me? For example, he is taking the mortgage.
In both cases, they both are 100% liable for the balance of the mortgage.
But one difference is, as a co-signer, your credit score, if, say for example, I default, your
Oh.
credit score will get
But as a
implicated.
guarantor, it won't.
No,
But in this case, in co-signer, so if Amit is co-signing with him, so Amit will be on the title also. Amit's credit, on that case, he need a co-signer because he's not qualifying. His capacity is not there.
Okay. But in both the cases, if he defaults, then Amit as a co-signer, me as a guarantor.
You are 100% liable to pay
no,
the
yeah,
mortgage.
but liable, but credit score for him
Yes,
as a
Amit,
guarantor.
If you going, because that mortgage will show in his credit report too.
Oh,
As a guarantor.
Of course,
So it will hit my credit score as well.
of course.
oh, okay. Okay. Wow.
And to get released for both of us as a co-signer, as a guarantor, he needs to give consent as well, right?
You know what happened? For example, he must have to be reapproved
Credit.
himself when he is ready with his changes happen. His credit rating has gone better. Now he's fit well, and then he is okay. Then you can change your
If
name.
not, then no, decline. Request decline.
Definitely request decline.
Or to release any
Yeah,
of us.
definitely. So these kind of decisions you have to be very careful when you take these decisions. Basically.
So, I'm a real-time scenario. So
Mhm.
I have co-signed
Mhm.
one of my friends' auto loan.
Okay.
Okay,
Mhm.
for $25,000-$26,000.
Mhm.
Okay, touch wood, until to this day he has not defaulted. I know the implications. I clearly know my credit score will be this
Screwed.
one. Yeah, screwed if he misses the payment. Okay. Now, for some reason, there are only two ways. If I'm going for a mortgage, either I have my auto loan as well. So either I have to pay off one of the auto loans to get approved for more
Mhm.
loan to value,
Mhm.
or I have to get out of that co-signer deal.
So how many years it was a lease or loan?
It's a loan, auto
So
loan.
you guarantor to auto loan or auto lease?
Auto finance.
Auto financing.
Yeah,
So it's a 5 years financing.
I think yes, 5 or
So how many years left?
not even 1 year completed.
Completed, right?
Yeah,
All
at
right.
least mine 1 year completed.
Okay. You can call and with which financial institution you have a loan?
For that car,
Mhm.
I think that is RBC.
RBC.
Yeah.
Okay. I don't know. There's on one way. I'm not have much knowledge about these auto loans. How I know how it works because mostly dealer applied it. So he can request RBC that my friend has to buy a house, so he want to come out from this loan. Am I because now I almost 1 year payments. I paying on time and everything. I have this much savings and the ratio work. Maybe the ratios work same way. I don't know exactly with the mortgage. They may be removing your name.
Okay. Because I'm in the
He has a
title.
stable job now,
Yes, yeah.
and he has a stable. The credit also good.
Yeah, that is all. The only reason the agent told why he doesn't qualify is because of his status.
Okay. Now what is his status now?
He is in work permit now.
Still in work permit?
Yeah.
Did he apply for PR?
Yeah. No, not yet.
At the time of application also, he was on work.
Yeah, work permit. Until now, he has not applied for his PR because he is fulfilling that Dog B
Okay.
category
Yeah.
job.
So wait a bit.
So once he applies for PR, will I be able to get out?
Yes, that's the maybe much. An application is accepted to process in that case.
Okay, acknowledgement.
Yes.
Okay.
All right. So you're a guarantor or you're
Of course,
a
I'm on the
co-signer?
title.
All right.
That's what I'm praying every day. Pay kar dena, pay
Okay.
kar dena.
So next thing I'm telling you, the property the customer refinancing or buying, I always ask in the refinance cases if the basement is finished or not.
Hmm.
If it's finished, there's a separate renters or not.
Hmm.
If there's a separate renters, is rented or not.
Rented or not, yeah.
And if it's rented, how are you getting a rent?
Ah,
It's cash, e-transfer,
ah,
or if you always get an e-transfer
Hmm.
or paid by check all the time, or 1 month e-transfer, 1 month cash, because we need a trail.
Hmm.
The reason I'm saying, if we doesn't have a trail, we can provide a lease to the financial institution, and we can request for the market rent of the property. So the appraisal company will give a market rent of the property,
Oh.
right? That is accepted by the financial institutions, basically, or based on the policy of that, right? Yeah. And how much the other thing is, main thing I'm coming over here on the life events. When we asking the customer, always ask about dependence. Oh, I have a 16 year and 14 years, 2 kids, and customer is buying a property.
Mhm.
Then talk about the kids' education. So, what you planning for the kids? My elder one is going university in 2 years. Very nice. So, did you got any plan? It's just talking to financial as a advisor role kind of thing, basically. Oh no, I don't have any plans for any saving, or maybe very small. And okay, so what I'm gonna do, one thing I will add, or I will ask maybe to you take a product with a home line. So all your payments,
But,
the principal of the payments will go in the line of credit and available for you in the future. In 2 years, maybe there's a $30,000, depend on the rate of interest and all these things. So, but that can help you. So it is available for you for the future withdrawals at the rate of prime plus half or prime plus one, whatever the rate is, and interest only payment options, and you can use for the study of the kids. So knowing the changes, life events, any other family member coming from back home as a joining you as a parents, you sponsoring, so your family is expanding, or you're expecting
A new one.
a new guest in the family, and if the young couple, so all, and then they'll have to make a change in the future from apartment to a house. So it means in the 2 years mm, time, they may be they have to sell this house. So why are we getting a 5 year fix for them? Suggest them for go for 2 years, because after that, two suggestions to them. One, there's a term called port.
ah,
Port means I got a 5 year fixed term with the financial institution. I completed 2 years. My rate is 4%. Remaining time is 3 years. Remaining amortization is 27 years. So I can take the whole product from one roof, from one house to the new purchase. So the new purchase is 600,000, 20% down. My mortgage is
still for
480,000. So $400,000 mortgage balance for the remaining 3 years term, 4% rate. I moved to this house, but I need a $80,000 more. So the financial institution added another component. There's a one couple of financial institution. The current rate is 5%, but the old rate is this.
4%.
So based on how much the new business is bringing the customer and how much remaining period, they extend blend the term. That term extending blending means the customer's rate may be 4.3, and they will make a
4.8.
500,000 mortgage. So extend blend is option two, by porting and adding the another component based on the current
Rate.
rate. So there's options available. Give these options to the customer based on the because we have two major banks working with the broker side. One is TD Bank, Scotia Bank. Now the HSBC also we having it right now, right? And HSBC also has a good products for the good rates for the high net worth clients. So we will when we having a community trust training,
On 27th.
27th. So be on that is very useful, like the prompt. So these trainings always, because what happened,
Sunday.
you know more products.
I have sent the email.
Sunday,
I
Yeah.
don't remember that. It won't be on Sunday. Then it will be 25th, I think.
Friday.
So changing life events is very important, KYC. And then when you start these things, and you will start, you will start enjoying it, because it's like a riddle. You have to find a solution for the customer.
Yeah, what product is suitable?
Yeah.
For them? Yeah.
So that's basically the KYC point. I think so. We are enough for today for KYC.
Yeah.
Right. And starting today, you're having an appointment, and best of luck to you.
Maybe take this form with you.
Yeah.
You will
It's
get-
very
Filling up.
useful. Very
Yeah.
useful.
Very
But this is
descriptive.
okay. I will take this, but this is for first time home purchase or sorry,
For anybody, it's
new
fine.
purchase.
You-
Okay.
Yeah, you get the
Okay,
idea.
I can add 3 more pages in there.
Yeah, for
No, of course.
yes, sir. No, but I was like because today's appointment, I definitely
Yeah.
think the second mortgage is a good option for them. Only for Wednesday's
Mhm.
appointment,
Mhm.
I am very doubtful.
Yeah.
But this is good for the initial.
Initially, yeah.
Yes.
But another thing, we don't need to be create so lengthy, because based on the answer of that,
Mm,
what questions you have to ask.
mm, mm,
That's it. It's a vice versa will happen.
No, but there's good specific questions
Definitely,
that
definitely,
really direct to
definitely.
that. Yeah.
I actually, when the first time home buyers, when I meet, or any first time I'm meeting the customer, first of all, I totally, ask the customer how much knowledge you have about mortgages. Basically, the knowledge wise, because if customer says, okay, one thing last time, this realtor took to one broker or one banker, and we just go in the branch, or we just go in the office, sign the paper, so we're just here. You can find a lot of customers like that.
Mm.
And this is happening a lot in the industry.
Yeah.
The customer, you not even know what's happening with them.
Yeah. Or they did buy a home and they are not first
Yeah.
time home buyers.
So
but, yeah.
then customer asking, why you asking this? I'm not testing you, because then I will start my conversation with you by educating you, also giving you some knowledge about the mortgage industry, because you have to pay this mortgage payment for coming 30 years with a 30 years amortization, right?
Mhm.
And if you plan to keep that, you can pay it faster too, right? But yes, there's another plan if you want to pay mortgage faster, right? We can suggest for bi-weekly payments instead of monthly. It helps. It's given us a cushion. Even you paying extra $2,000, $3,000 a year, a small amount, maybe 2-3 extra payments will also help you out for long term.
Or expedited. Then what is
Mortgage.
The blended, extended blended?
yeah, like paying 13 months payment and making it equal into 12
Of course,
months.
yes, yeah. Bi-weekly payment, accelerated,
Excellent.
accelerated payments.
payments, yeah.
My tongue just got twisted when I use this word. I never pronounce this word right. Accelerated. So yeah, so good. So जी आप भी डालेंगे basically. ये जो prompt financial का था ना, I guarantee you आपको पास lead आएगी.
Can you just close it?
Yes. All right. So this was for all, and enjoy your weekend. Saturday, I think so. It's a little windy and a little, but it's weather is temperature is very nice. It's not too hot.
Yeah.
All right. So bye bye to everyone.
Peace out, you too.